Let's now talk about the pandemic. The Omicron variant is taking over the world. Infections across the world are on the rise. Restrictions are returning in countries. More and more nations are mulling lockdowns. It is a nightmare that has spooked markets. In South Asia, the Indian rupee is ending a rocky year as Asia's worst performing currency. The Indian rupee has slid from 72 against US dollar in March 2020 to around 76 to a dollar now. This comes as foreign funds are fleeing the nation's stocks. There are essentially two main reasons for this fall: a rapid jump of crude oil in the global market and the strengthening of the US dollar. Much of the rupee's weakening has to do with the strengthening of the dollar across markets. There are fears of economic slowdowns. This is causing investors to divert to the dollar, now, which is accepted as a global reserve currency. Another major reason for weakening rupee is India's trade deficit. It has widened to an all-time high of about $23 billion in November. Meanwhile, neighboring Sri Lanka is facing a major economic crisis. This comes as dwindling foreign reserves put pressure on the monetary system. With a population of around 22 million, Sri Lanka is heavily dependent on imports. Most food products and essentials are imported from neighboring countries, including India. So for importing food and other commodities, Sri Lanka needs foreign currency reserves to pay for them. One of the nation's source of earning is its tourism sector, which accounts for over 10% of the nation's GDP. But the pandemic has heavily impacted the tourism sector. Tourist arrivals have reduced in 2020 due to the restrictions on travel, causing the Sri Lankan economy to shrink by as much as 3.6%. Sri Lanka's foreign reserves are depleting at an alarming rate. The inflow is a trickle compared to the outflow of cash. Sri Lanka's inflation reached 9.9% in November, with its $81 billion foreign reserves depleting to $1.6 billion US at the end of November.